Ladies and gentlemen, welcome back to the channel. You had major tech earnings like Apple, Amazon, and Google that reported in after hours, and none of them were good. Specifically, Apple was a really dark spot out of all of this, guys. So we're going to get into what these numbers are, how this could affect the markets, as well as how it could affect AMC here in this video. But as well as that, I want to go over the obvious data, like the Ortex data on AMC. The cost to borrow max, I'll tell you right now, I reported to you guys was 855% earlier. It is 905% right now. Long story short, that is telling you something. We'll discuss it here in this video. But even I think more important than that, I took the liberty to just write down all of the reasons or things that have changed that makes me more bullish on AMC now than months ago or a year ago or just even over the last couple of weeks for some of these points. So let's get into all of this information, guys. If you are wondering why there's this smudgy stuff on the wall, I totally did not let my daughter break out her chalk and go ham on the wall. That's what that is. Nonetheless, guys, let's get into it. So first things first, we're going to talk about the earnings. We're going to get this stuff out of the way because I'm sure a lot of people are wondering what's going on with these companies. They're all roughly down about the same. They're all down about 4% across the board. And this is coming off of a very strong day in the NASDAQ, where the NASDAQ did go up 3.25%, S&P up 1.5%, and the lonely Dow is down 0.11%. So just what you're getting off the headlines here. Apple sales dropped 5% in largest quarterly decline or quarterly revenue decline since 2016. That is not a good headline, and Apple basically missed on everything. Services was the only thing that did better than expectations, but it was so marginal, it like barely makes a difference. Now, you could see Amazon beats on fourth quarter revenue, but provides light guidance. And essentially what Amazon and Google did is kind of straddle their guidance. So for Amazon, the guidance was for about $100 and I believe it's $25 million or $1 billion of revenue for Q1. They're basically saying, hey, on the low end, we're thinking 124. On the higher end, we're thinking 130, right? And I believe those are the numbers. Maybe I'm getting two companies mixed up here. But that's roughly what they're doing. They're lowering the guidance on one end, and then they're saying, well, it could come in higher than your estimate. So that's kind of making things a little bit harder to read, and it's going to take more digestion from the markets to get a feel of, is that bullish or is that bearish? Now, Google, they missed on earnings, they missed on revenue as YouTube falls short. It's probably because you guys didn't hit the like button, baby. You want to hit that like button. It might actually help the markets go up, or at least might help out Google a little bit on their earnings, which might make the markets go up a little bit, at least in following quarters. Now, all jokes aside, this is not good for the psychology of where the markets are at. But it does not have to be a doomsday scenario for the markets. It's not like Apple, you know, is down 15, 20% right now. Who knows? Things could change. They're down about 4% right now. The earnings call will be very, very important. Now, I do want to focus just for a minute on what these numbers look like from Apple, because they're just really not good at all. So EPS of $1.88 versus $1.94 expected, down 10.9% year over year. Revenue of $117.15 billion versus $121.10 billion that was estimated, down 5.49% year over year. iPhone revenue, $65.78 billion versus $68.29 billion estimated, down 8.17%. iPhones really are a dark spot in this report. Mac revenue, $7.74 billion versus $9.63 billion estimated, down 28.66% year over year. iPad revenue, this is surprising because nobody thought this was going to come in good. It was actually the only thing besides services to beat, and it had the largest year-over-year increase. iPad revenue came in at 9.40 billion versus 7.76 billion that was estimated, up 29.66% year-over-year. iPads actually did really good. Unfortunately, iPad is like one of the smallest segments, or actually one of the smallest segments. Obviously, the main segments, iPad is the smallest one, so it's not a huge deal. Other products revenue 13.48 billion versus 15.23 billion, estimated down 8.3% year over year. So that did beat a little bit. That's like wearables, things like that. Services revenue of 20.77 billion versus 20.67 billion, estimated up 6.4% year over year. And gross margin came in almost on expectations exactly at 42.96% versus 42.95% that was estimated. So these numbers are not good. And there could be a way that management skews this and tries to make up for it in the earnings call. But what we're seeing right now is Apple is giving away all of its day's gains, dropping about $6 in after hours down to $144.78. And just so you guys know, we do have a trading program where I send out my alerts in real time, not to be seen as financial advice, not to be a recommendation to buy or sell anything. I provide you guys a thesis when I do make these trades. It's only to highlight kind of what I'm doing for someone that's been in the markets for years now and pretty much been an active trader ever since I got into the markets in about 2018, the beginning of 2018. So lived through this stuff many times, have learned a lot over the years, and just willing to provide a little bit more value to you guys. That is not a freemium service, that is a premium service. So if you guys want to be a part of it, link down below in the description. And I do it so people can have a little bit of help in just how they evaluate different trades or go about trading things, but you don't have to pay like $2,000 to sign up, right? It's like $20 a month. Nonetheless, link down below in the description. We do have the 145 puts on Apple. Those are in the money by about $30. Couple weeks till expiration on those, so that likely will do pretty well in the morning. Now, on earnings, the guidance call is going to be extremely important, or conference call, and the guidance that we get from that will be super important for the markets. You can see the S&P 500 down 0.63% in after hours based off of this, and we'll have to wait and see because everything's down kind of the same. Apple's down 4%, Amazon's down 3.77%, and Google is down 3.61%. So it's going to get interesting pretty quickly here. This does not have to be a death sentence for the markets. Like I said, earnings were not great, especially not at Apple, but they're not as bad as potentially they could have been. And that might be something that gets highlighted by investors. So we'll see. I do think you can be cautiously optimistic right here. And why I say this is because it might be a positive thing if the markets stay in a positive mindset. Maybe Fed Jerome Powell alone is enough to do that, since the earnings are not too bad, relatively speaking. But if the markets stay in a positive light, then it's going to be a lot easier to reward AMC when good news does come out, guys. So now I want to jump into the reasons why I am bullish currently on AMC, why I'm more bullish now than what I have really ever been. And there's quite a few things to go over, guys. So first things first, the cost to borrow rates going from 30% to 800% here today, or now 900% here today. That is telling you something. That is telling you there is people that want to get their hands on shares to short at the same time. It's driving those cost borrow rates up for everyone that already has existing short positions on AMC. So it's not an ideal situation. For short sellers, cost to borrow tends to be one of the largest factors that can lead to a short squeeze. Then again, the next one is pretty straightforward. Along with the cost to borrow rates, short interest going from 16% to 23%. You haven't seen these levels since the June 2021 short squeeze, gamma squeeze, whatever you want to call it. We have not been at these levels in a very long time. Last time we were, the stock increased 10x. Now, the technicals. And I want you guys, as we go through this, to kind of string everything together, because all of it is working together. All of it's intertwined. So when I say the technicals are really good, you're getting to your 100-day moving average. You're potentially about to break through this downtrending level of resistance, and that overall is what you want to see heading into earnings, or at least some point over the next couple of days. You're either going to get rejected or, you know, follow through on this just because you're so close to this level. Now, I think one of the things that might be overlooked the most, these next two things are super overlooked in my opinion, is the Fed flipping to a dovish stance. This has loosened financial conditions. And what does that mean? Well, stocks that would normally be seen as overvalued might look reasonable if the Fed is going to pause raising rates, if that leads to the economy holding up okay. So what happens when good news comes out on that said stock? Well, you don't have this huge negative pressure from the markets that are saying, hey, the economy is getting terrible, the Fed's just going to continue to raise rates. You really don't have that, call it fear, in the background right now, because Fed Jerome Powell actually gave us something that was very, very bullish, and that was just an overall dovish stance on the press conference that we got yesterday. Now, this one's obvious as well, but highly overlooked. It's a better movie slate for 2023 rather than 2022. A lot of people tend to forget and not realize that AMC is very much a business that is based off of other businesses. Those movie studios, when they were not producing movies over the past couple of years, that was not ever going to be a good thing for AMC. Like, there was literally nothing AMC could have done about that. It's not that AMC is not doing well in regards to its own business, or that people are not going to theaters. There was nothing to go see in theaters. 2022 was better, and that's why you've seen an over 50% increase to just overall moviegoers and the box office industry, but that was concentrated in just a couple films. In 2023, you're going to get a lot of reasons, aka a lot of movies that are going to theaters that will drive people to the movie. So when you mix all of this together, does it make sense to be short right here and right now? I personally don't see it. I personally don't think so. And I think it's along the same lines as the hedge funds are looking at this. So if your trade all of a sudden becomes destined to lose you money, if you're a short seller and you're shorting AMC, you're not going to keep that short position open, especially when you know how explosive AMC could get. So for all of these factors, and I'm sure there's many more, this was just me brainstorming literally for like 2 minutes. I'm sure there's more, but these are the big reasons, the holy grails of why I'm more bullish now than I have been over the previous weeks and months and over the last year. We have never been in this situation since June of 2021, the last time the AMC did go through a gamma squeeze or said short squeeze, and on a technical basis even, you are at the same exact level as where you were before the June rallies. So for these reasons, I am more bullish now on AMC than I have been in a very long time. Now, let's go ahead and look at the Ortex data and wrap up this video, because this one is probably going to be a little bit on the longer side. I feel like we did cover a lot, and you guys will get a lot of value out of this, but I don't want to prolong this video any longer than I have to for your guys' sake. The live short interest of free float, and she needs to take a nap, man. This kid does not sleep. 22.77% short interest of free float, 117.26 million shares that are sold short, cost to borrow average of 591.8%, cost to borrow max at 905.41%. Cost to borrow minimum at 7.26%, and you were seeing these numbers yesterday at 84.62%, and earlier in the day today at 473.88%. Last we knew from Interactive Brokers, the short availability was 103% cost to borrow, with 0 shares available to be sold short, but we have not gotten an update from this since January 27th, and I'm going to try to figure out why that is, but as of right now, we don't have an estimate, and maybe that's because the numbers are just astronomically high. Now, on another note, you are seeing more call activity as an aggregate placed on AMC, but the interesting flow sentiment that captures the most interesting, weird, bullish or super bearish option activities from hedge funds and market makers and money managers alike. It picked up 119 orders totaling $24.5 million, positive order value of 16%, a little bit better than our 1 week average of 10% positive order value. And over the last week, you have seen 478 orders totaling $153.5 million, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Khaleesi, tell them to hit the like button. Like button, baby. That is it. You guys enjoy the rest of your day, and I'll see you in the next one.